BingX, a trusted global crypto exchange. Trade spot, futures, or copy top traders easily. Sign up via the link or referral code to get 30 USDT instantly, plus up to 1,500 USDT in bonuses for verification, deposit, and trading.
China's carbon dioxide emissions have displayed a remarkable trend of remaining flat or even declining over the past 18 months. According to recent analysis, this development offers compelling evidence supporting the optimistic outlook that the world's largest emitter of CO2 the 2nd of May be on course to achieve its target of peaking emissions significantly ahead of schedule. The country's energy sector has witnessed unprecedented growth in solar and wind power generation, with solar capacity surging by 46% and wind by 11% in the third quarter of this year alone. This renewable energy boom has effectively offset increased electricity demand, resulting in stable emissions from the energy sector. Indicative of this rapid expansion, China added a staggering 240 gigawatts of solar capacity in the first 9 months of this year, alongside 61 gigawatts of wind power, placing it firmly on track for another record-breaking year for renewable installations in 2025. To put this into perspective, last year China installed more solar power capacity than the rest of the world combined. The analysis, conducted by the Center for Research on Energy and Clean Air, CRE, for the science and climate policy website Carbon Brief, also highlighted declining emissions in key industrial sectors, including travel, cement, and steel, contributing to the overall stabilization of CO2 output. These groundbreaking findings emerge as global leaders convene in Brazil for COP30, a critical summit unfolding against a backdrop of heightened urgency in the global fight against the climate crisis. While Chinese President Xi Jinping was absent from the leaders' summit at the UN Climate Conference, a robust Chinese delegation is actively participating in the crucial climate talks. Notably, US President Donald Trump also did not attend, nor did he send a negotiation team. The stark reality of the climate situation was underscored last week by UN Secretary General Antonio Guterres, who warned of a moral failure and deadly negligence if governments fail to limit global heating to 1.5 degrees Celsius. Amidst these global discussions, Brazilian diplomat André Correia do Lago, the president of COP30, specifically lauded China's advancements in green technologies. He remarked that China is pioneering solutions that benefit the entire world, not just itself, while also lamenting the diminishing enthusiasm of developed nations in tackling the climate crisis. The diplomat pointed to the increasingly competitive cost of solar panels, making them a more attractive and widespread alternative to fossil fuel energy, a positive development for climate action. Lori Milaverde, the lead analyst at CRE, has cautioned that while the overall trend for 2025 points towards stabilization or a potential decrease, the final quarter of the year will be decisive. However, based on historical patterns of Chinese electricity demand and associated emissions peaking in the summer months, it is plausible that China's CO2 emissions could register a full-year decline for 2025. China has set ambitious dual carbon goals to peak emissions by 2030 and achieve carbon neutrality by 2060. More recently, in September, the country unveiled updated climate targets, aiming to reduce overall greenhouse gas emissions by 7% to 10% below their peak levels by 2035. Experts, however, have voiced concerns that these targets may be insufficient to avert catastrophic climate change, falling short of the estimated 30% reduction considered both feasible and necessary. Despite this, China has a well-established track record of exceeding its climate commitments. Li Shuo, director of the China Climate Hub at the Asia Society Policy Institute, suggests that these latest targets should be viewed as a baseline rather than a definitive ceiling for action. While China appears poised to meet its peak emissions target ahead of schedule, certain sectors of its economy are exhibiting trends that diverge from the decarbonization trajectory. Although oil demand and emissions in the transport sector saw a decrease of 5% in the third quarter, other areas experienced a 10% surge in emissions driven by increased production of plastics and other chemical products. Furthermore, China is currently projected to miss its target for reducing carbon intensity, the amount of CO2 emitted per unit of GDP, between 2020 and 2025. This shortfall will necessitate more substantial reductions in the future to achieve the 2030 goal. of a 65% cut in carbon intensity compared to 2005 levels. All eyes in China are now fixed on the forthcoming 15th Five-Year Plan, which will outline the government's priorities and policies for the 2026 to 2030 period. Although the full document is not expected until next year, preliminary indications from Chinese officials suggest a strong focus on low-carbon energy systems as a cornerstone of this pivotal economic blueprint.